How is everybody doing? Welcome back to another episode of The Banker Next Door. I am your host, Dr. Joe Berquist. Today, we're going to be taking a look at AI and how specifically AI can affect credit risk in banks, or rather, how can AI be adopted by banks to better aid in credit risk. You know, there's a lot of banking professionals out there right now that deal with credit risk on a daily basis at their respective financial institutions. And some of them are delving into some of the ways that basically AI can be used to deal with certain aspects of different things that go on in banks. So with that, I want to take a look at an article from PCBB, and this is part of their BID daily newsletter. And this was titled, this was a survey, Credit risk leaders plan rapid AI adoption. So a survey of senior credit risk executives revealed generative AI will impact 80% of credit risk assessments within 2 years. We discuss how generative AI can help CFIs manage the credit risk. So according to a McKinsey survey of senior credit executives, 20% reported already using generative artificial intelligence AI. Another 40% say they would implement AI in the next 3 to 6 months. 20% said they would implement AI in 6 to 12 months. The final 20% said they would implement AI in the next 1 to 2 years. In other words, half of those credit risk executives are already using AI or will start using it this year. Their thoughts about how to use AI can help community financial institutions consider how they might apply AI to managing their own credit risks. So how are they going to use it? So the executives McKinsey surveyed are using or considering AI applications that use large language models to summarize, combine, and analyze language and data. They can create reports, emails, summaries, and other complex forms of natural language, and can also generate structured data or instructions that other Microsoft tools can follow. That makes AI applications potentially useful in several key things: client engagement, credit decision and underwriting, portfolio monitoring, and customer assistance. So let's take a look at client engagement for a second. So CFIs can put generative AI to work by offering customers tightly personalized product menus based on the information that a CFI already has about those customers. AI can also write emails and meeting summaries, suggest what to do next, or help customers pick products that work for their individual situations. So interesting. Credit decision and underwriting. Generative AI can compare submitted paperwork against a list of required documents and let the user know what's missing or flag problems. It can also write emails asking for missing customer information and compile whatever customer information you do have. Customer service-based generative AI can even follow task sequences, which lets it get information from appropriate sources, find relevant ratios, compare those ratios against standard thresholds, and summarize results and credit memos for human credit officers to review, all at the behest of users who don't need substantial programming or advanced modeling skills. If your CFI approves the credit request, AI can draft contracts or write emails that tell customers about credit decisions or explain the next step. And then the next thing we have is portfolio monitoring. A portfolio manager could use generative AI to automatically create performance and risk reports or summarize analyst reports on possible ways to optimize portfolios. Systems based on generative AI can help identify borrowers who would benefit from extra attention or build optimization strategies for subsegments of a loan book that are in keeping with the CFI's overall risk profile. And then finally, we have customer assistance. When lending issues occur, generative AI can draft emails or letters to the borrower, point out possible loan restructuring options, and walk borrowers through the restructuring process. The technology can even help coach interactions between agents and customers. So a couple of really interesting things on this. So the first one is client engagement. So we've already seen the use of like chatbots, right? Like we're like, a lot of banks are experimenting with chatbots right now. I find chatbots at the moment to be highly annoying. I'm not a giant fan of chatbots. I think in certain respects they can be kind of helpful. I think most of the time they're just annoying and they it's like I didn't understand that. I didn't understand that. Can you ask it again? Can you ask another question? Whatever, and you sit there for 30 minutes and you're like, oh my gosh, I want to put a brick through my computer. So that's kind of interesting. So I think that there is potential there on the client engagement side. I'm not saying that chatbots won't eventually become very good. I think they will. I think, but they're not. I don't think they're quite there yet. I think the two biggest things on this list are credit decision and underwriting and portfolio monitoring. I don't know about, it said, it says here, like, let's take portfolio monitoring for a second. It says, systems based on generative AI can help identify borrowers who would benefit from extra attention and build optimization strategies for subsegments of a loan book that are in keeping with the CFI's overall risk portfolio. Yes. I think that if you used AI in certain ways, in other words, people start getting late on their loan payments. You get somebody who's repeatedly late. They're late 3-4 months in a row. They might send out a notice to a lender. They might say, "Hey, you might want to call this borrower and just find out what's going on because we're seeing some red flags here." If people haven't turned in their updated financials. If you didn't get an updated tax return, personal tax returns, business tax returns, updated personal financial statement, whatever, or maybe some type of quarterly financials, AR reports, inventory reports, just things like that. So if things like that are not coming in, this could be incredibly useful in providing, notices for, red flags to, credit officers or lending officers that basically say, hey, something may be up with this customer. You might just want to check in and make sure that everything's okay. So I think that would be a huge benefit. I think also you think of portfolio monitoring, right? This was an exercise I just went through. Obviously, commercial real estate, particularly office commercial real estate, is a big issue right now. Your board comes in and says, hey, we need to take a look at our loan portfolio because, we're anticipating that the regulators at the next exam are going to ask us, what percentage of your loan portfolio is commercial office properties? And then we want a list of those loans. And then we need you to break down what's the profile on those properties? Are these large office buildings in urban cities? Are these, smaller office properties out in the suburbs? What's the deal here? And then are these owner occupied versus pure investment properties? What's the breakup of that? Okay. Now, in certain respects right now, you go to do that and that you might be able to pull a list of borrowers, but then you might have to do a very manual process to basically go in and say, okay, what's the makeup of this building? Okay. It's a 30,000 square foot building. There's 10 tenants in it. Here's we have leases on the tenants. Here's an updated rent roll, that kind of thing. Whereas if you have all that information in a system and you plug that into AI might be able to, if it's there in the system, AI might be able to extract that information literally within minutes and give you a complete breakdown. And they might be able to come out and say, yes, 10.87% of your system is, or 10.87% of your portfolio is made up of commercial office properties that are half based in the urban setting and half based in the suburban setting, or what do they call it? Tertiary setting. And, and it could give you a total breakdown. It could say, yes, we have information on, here's a list of 108 loans that make up, X amount, that make up a total of, $68 million in lending across 108 loans on 108 different properties. And here's the makeup of all these buildings. Most of them, 78% of them are pure investment properties. We have updated information on, half the properties. So you need to go get updated information, whatever. But I mean, that could be, but the point is that could be a very, great list of information that you could get very quickly. And so I could see a lot of, chief credit officers, chief risk officers basically saying, yeah, I would love to be able to have a tool at my disposal that I could get that kind of information that quickly to be able to report back to the CEO, report back to the board exactly what's going on. I mean, again, not that you can't get that information now, you just probably have to spend a little bit of time and legwork, putting that all together and figuring it all out. Here's the other interesting aspect to this: credit decision and underwriting. So it says here, customer service-based generative AI can even follow task requests, which lets it get information from appropriate sources, i.e., going out onto the internet, scouring social media sites, and pulling in all kinds of information on you personally to build a profile on you personally or your company. Find relevant ratios. In other words, let's analyze the tax returns. Let's do a ratio analysis on all the tax returns, and let's see what ratios might be more important than others given that particular business and their particular industry. Compare those ratios against standard thresholds, in other words, benchmarking, and summarize results in credit memos for human credit officers to review. In other words, it will put the whole credit memo together for you. You're just going to tell it what to do. So I'll give you an example. How do we build upon this? So say your bank already does automated credit underwriting of, say, loans up to $250,000. So now you come in, now you put the AI piece on top of it. So what does the system do right now? Okay. Somebody goes online, they fill out an application, they say, I want a $200,000 line of credit for my business. They upload some tax returns. Boom, it goes in. Maybe it automatically goes into a credit scoring system. Maybe it doesn't. Maybe somebody just has to review what's been submitted and then throw it in to the system, whatever. But now it's in the system. So the system right now scans the tax returns, automatically puts together a cash flow, credit scores the person, maybe credit scores the business, and then puts the information together for you, creates an overall credit score on that, and puts it to you and says, yeah, we recommend approval or decline based on these factors that we've given. And you may either have that automated system set up to either automatically decision based on X number of parameters, or a lot of banks out there simply say, like, no, we still want a human person to render the final decision, so that they get the credit score that goes. And again, and it does all this it could do all this in minutes. Basically analyze everything that's input. So as the inputter on the front end, you're just making sure, like, do I have the application? Do I have all the information? Is it all going in properly? And then it comes out. So you may have a human, though, that makes the final decision on the end of that based on the credit score. Here, we are going a step further, because here what the AI is going to do is, you're going to basically say, okay, Bobby Jones down the street and Sarah White have come in and they want to apply for a $200,000 line of credit to their business. We asked them for information, and now the system is literally going to go out. It's going to go onto the internet. It is going to look up Bobby Jones and Sarah White, and it is going to pull their information from Facebook, from LinkedIn, from Twitter, from TikTok. It's going to, or X rather, whatever. It's going to pull all their information together. It will build a profile. Then it will examine the company. It will then do the entire what's called credit write-up. It'll put the whole credit write-up together, and it will either render a decision, or it will, like I said, send it to the credit officer to basically say, okay, here's the whole report. Here's all the information. Here's a detailed profile on these two individuals who own this company that want to come in and have requested a line of credit. Here's our analysis of all the financials. Here's it's benchmarked. Here's the ratios. Here's why or you would or would not want to approve this particular loan, and it goes from there. So yeah, I mean, I think a lot of the things that are being worked on right now are pretty incredible. And I think that you will have, again, credit officers, risk professionals out there that will basically say, yeah, we love this stuff and we would really love to do it. Now, and then just the last point here, generative AI can draft emails or letters to borrowers, point out possible loan restructuring options, and walk borrowers through the restructuring process. Yeah, I don't know that we're there yet. We still have this thing called lawyers. We still have this thing called litigation. And yeah, I don't know that AI has gotten to the point yet where it's sophisticated enough where it can start, suggesting possible restructuring options and then walking the borrowers through the restructuring process. I think we still need humans involved in that, and I think that will probably be the last piece of this thing that we get to. Just because of, like I said, that there's just because the nature of the beast, the nature of litigation and things that go on there. So, and let's see what they say here at the end here, based on all those comments, all the things I just said. What does it say here? Portfolio monitoring is the most popular area to use generative AI, followed by credit applications, controls, and reporting. The respondents see a little more possibility for generative AI in wholesale credit over retail. So just what I said right there, portfolio monitoring is the most popular area, and the reasons I stated before as to why somebody would really want that tool. And then followed by credit applications. So in other words, credit underwriting and decisioning. So a McKinsey survey showed that credit risk executives are either already using generative AI or plan to start soon. Client engagement, credit decisions, underwriting, loan portfolio monitoring, and customer assistance were all spots where AI can help run credit risk. As AI continues to integrate into financial practices, it offers significant opportunities to enhance efficiency and accuracy. However, CFIs should be prudent in their AI adoption, ensuring that any AI applications align with their overall risk management practices and do not introduce unforeseen vulnerabilities. Careful implementation and ongoing oversight will be key to leveraging AI effectively while maintaining sound risk management. And I would definitely say that I would end with this is that if you're a financial institution and you're looking at implementing AI, you've got to be very, 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 very careful. You've got to consider, are you doing this in-house? Do you have the resources and the technology to do this in-house? If you're doing it outside of the house, are you hiring a vendor to do this? How is the vendor working with you? What kind of safeguards do they have around this AI? What happens if something goes wrong? If the regulators come in and ask you to explain what it is you were doing and how you were doing it, can you give them satisfactory answers? When they ask you things like, was your AI system unbiased? Are you going to be able to answer that? Just things like that you have to keep in mind. So, but this was, like I said, this was really interesting and for really interesting things that are going on here in terms of AI and how it is being introduced into financial institutions and what the financial institutions ultimately are going to do with that. But if you liked this episode, I'll wrap up with this. If you like this, please make sure to like, share, and subscribe, as that always helps the channel. Please remember, we are on YouTube, Rumble, and all major podcast platforms. If you have comments, please leave them down below, as I always love getting back to people. And I will see everybody again real soon. Thanks a lot.